And then I said to her, I said, it's not, well, I said, first of all, it's fun to me. It's not going to be fun to everybody. But then second of all, really, it's not about fun. It's about having something that's successful. I don't have to worry about nothing because I know every year I'm going to win. And on years that it appears like I'm not winning, the year after that, it's going to recover, and it's going to recover with a double win. So
what do you call it? Let's just want to put this quote in. That's why they say that the chains of habit are too light to be felt until they're too strong to be broken.
This is it, exactly. And that's Warren Buffett's quote, and it's right. And that was an investment quote. And
chains of habit.
And even Warren Buffett even has a little bit of chains of habit, and a lot of hardened neuroplasticity because, as we could say, like when things change, you have to change with them. And I've noticed, even though it used to be 99.9% of my investment habit, and the core foundation is still based upon Warren Buffett, but 99.9% of it was Warren Buffett style. I've noticed that there's a different investment environment than it was from when he was giving all those Q&As, and when I learned from him from those 1960, 1970 Q&As. I've seen all of them. But the environment is different. The environment is, okay, you can invest in tech companies at a high rate, in which back then it was voodoo to invest in tech companies because you can't understand the financials. And really, I'll even say, even still today, it's kind of hard to understand the financials a little bit. There was a hedge fund manager the other day from, I might be wrong, but from Guggenheimer Fund. I might be wrong. I don't even want to say the name because I might be wrong. But if I see him again, I know who he is. And he was just saying, I just don't understand the Tesla financials.
I mean,
he said he said to me, it just seems bubblish. It just seems very bubblish.
It seems bubblish.
I mean, which I will agree with him, it does, but a lot of people thought Google was a bubble.
Yeah, no, look at that.
They were very wrong.
They're very good.
They were very wrong. Really, in essence, if Tesla just continues to do what they are doing, and continue to increase their market value, not only as an equity over the market, but their actual hard assets, if they're able to increase that by continuing to sell vehicles, make newer vehicles to sell, and people are also investing because they have SpaceX and keep expanding with SpaceX, keep expanding with all of their projects, the Neuralink, the solar company, and buy companies to increase their underlying values. That's a part of it. Every time you buy a company, you increase your underlying assets. Look at Warren Buffett, Berkshire Hathaway. That's all they do now is buy other companies. That's all they do. Buy healthy companies. That's all they do. They're essentially just a holding company now that is comprised of very, very healthy companies. So as long as he continues to do that, he won't be slowing down. He won't be slowing down. And like the video that not to cut you off, but like the video I had, he is like a Jordan. I mean, he's like a Jordan or Kobe Bryant. It's like, you don't know if he's gonna have the buzzer beater and win the game, or if he's gonna drop 50 or 60 points, or he just might be a game where he loses. But definitely, for the long ride, he's gonna get you chips. He's gonna bring chips.
100%. And I was gonna just say, just the projects or the problems he's trying to solve, are not short-term problems.
Yeah.
I mean, he's got workload for decades.
Yeah.
I mean, just the fact that he's trying to do something with space, that's not something he's going to be done with tomorrow or
No.
next 10 years.
No.
These are 50, 60-year, like, stuff. The stuff he's trying to get his fingers in and solve are long-term.
Yeah.
Forever.
Yeah, they are.
Like, some problems to be solved. Like to put people into space and put them in to the moon. I mean, yeah, like he's just not. It's just something that when I think of him, it's not. I would invest into him because of the fact that it's not something that's going to die. Like what he's doing is not going to be gone in 10 years.
Yeah,
it's going to be something that's going to have to be around for a while.
Yeah,
a while.
And it is what it is. Even what is his name? Fuck. Pimco.
Mm-hmm.
He was the #1 guy on Pimco for a long time on the bond funds. Pimco. Fuck is his name? But anyways, I don't know if you can Google that right now, but the guy for Pimco even said a while ago, when Warren Buffett, there was companies that were looking for capital for investment, and Warren Buffett and Charlie Munger went to him for investment a long time ago, and
right.
He said, well, who are these guys? I mean, they own candy companies, and they're talking about investing in stocks and whatnot, and I mean, I don't really understand what they got going on. This doesn't really seem like a good business. Then this guy who was buying these warehouses and selling cheap items of all sorts in these warehouses, like, what is this? What kind of business is this? You're buying warehouses and you're selling every type of product basically that people buy, and you're selling it for discounted prices in a huge warehouse. I mean, what kind of shit is this? I'm not giving you no money. And then he went to another company that had beautiful secretaries and shit, and they were working out of beautiful buildings. Long story short, he gave investment to that company, and that company failed. And the two other companies that he didn't give investment to, which was the warehouse company, turned out to be Walmart, right? And then the other company that he didn't give money to, Warren Buffett and Berkshire Hathaway, top 5 largest companies in the world. So he said, really, I learned that not always are you going to look at a business and be able to predict its future, but if you bet on the right people. And he said, I should have betted on Warren Buffett and Charlie Munger. They were good people. Even though the business looked weird, they were good people. I should have bet on Bill Walton. Even though the business looked weird, nobody was buying warehouses and selling discounted fucking detergent and clothes.
Well, let me ask you a question, Root. Let me ask you a question from an investing standpoint. Like you just said that at that time, their company was weird. But the question is, from an investor, how many weird companies fell in general to where he made actually a smart decision at that time and says, I'm not going to invest in you because you're weird, because all the weird people in general fail. Is that fair to say? Like, because how do you know? You're speculating. How would you have known in general if something's an ideology that's not normal at that time period? I can't see a smart person saying, yeah, I'm not going to do it because you're one of a kind, but all the others are failing, though.
Yeah, no. So there is two parts to that, right?
New ideas all day long, Rube. All day long, people start new ideas.
Right. So there is two parts to that. There is absolutely positively. Great point you made. There is two parts to that. So one of the parts is that, like me, for example, I'm still going to value invest, and that's going to be the core. But I know that when it comes to being a Ted Williams, when trying to hit 400, right, there are some swings that are going to come by, and I'm like looking at it like, this is outside of my strike, my high percentage hit area, my strike zone. It's kind of outside of it, but it looks damn fucking good. And you know what? It looks like I could knock that motherfucker out of the park. You know, and so sometimes you might have to swing at some shit like that. I mean, people who put into Bitcoin when it was at nothing, They can't sit here and say, "Oh, I was investing in Bitcoin because I knew it was a good investment." No, you did not.
Yeah.
No, you did not. You did not know it was no good investment.
Right. You're basing up of what?
You just basically you had a feeling that this would blow, and you were able to get in when it was low, and it did blow, and hopefully you got out at a good price.
Right.
But there was no fundamentals. You didn't read a balance sheet. You didn't read an annual report that told you that, because there is none.
So if something is new, I guess my point is, if something is new and it's not done before, where do you base it off? Where do you base your analysis off to say?
The person. Like you said, the financials, Tesla, it makes you sick to my stomach. Even with Apple, like looking at Apple, like 6 years ago, like 6-7 years ago, I remember the market did well one year, and Apple had a loss. And I'm like, well, how do they have a loss, and they're not? And the fact of the matter, the market did well overall. That's right. So, and I remember, and this is funny. I remember sitting in Trump Towers, right? Because it's open to the public. So I remember sitting in Trump Towers. This is like end of 2013, early 2014. I was looking at financial reports, and I'm like, Apple does not look like good to invest right now, right? So I'm like, no, I don't invest in Apple. So I'm sitting in Trump Tower, and that's near the financial district, and I'm listening to a table. And this is funny, again with the neuroplasticity. He was also said where there are points in life where things will happen and you get so much immense dopamine from that particular situation, it will get recorded in your mind to where it'll be something that you'll remember for years to come. So remember how I have good memory? So a lot of these events that happen, it just has ridiculous splashes of dopamine during that time. That's why I'm able to remember it. So during this time, right, I hear that these two people talking to their investment manager at a table close by, that everybody said invest in Apple, and we invested in Apple, and it looks like Apple's been going down about 10-15%. And then they said something else. Everybody else said also I should invest in AIG, but at the time, even AIG had went down or something like that. And those were two companies that I had said people were saying invest in, and I was like, no, the financials don't look right. And that made me realize in my mind, look at the annual reports. So, but over time, Apple recovered because of the simple fact that, and I'm not 100% accurate, but half of all the phones that are being purchased by Apple. Half of all the phones, half of all the computers, and they have proprietary system to where if you start buying their products, you have to continue buying their products because it's not compatible with anything else.
Smart, yeah.
And so they force you into their market share. So the fact that the financials don't always add up, which they're a lot better now because they have a CEO for that, and the fact that Tesla's financials don't always act right, Facebook's financials don't always act right. The fact of the matter is, you have to understand that I've learned that also when it comes to investing, you can invest in companies that have basically monopolies in areas. Innovation that is going to take over, monopolies in specific areas where they dominate. Facebook dominates the social media platform, and they try to buy up all the other social media platforms like YouTube, like Instagram, Twitter, Snapchat. I think I don't know if they own Twitter or Snapchat, but they might have. Tesla with vehicles, they have an increasing share of the vehicles in the United States. And not only that, which I learned the other day, which makes Tesla very good, attractive. In China, or in Asia, either China or Asia, there's like 12 electric car companies. And they own 25 to 40% of all electric cars sold in that market are Teslas. So when it comes to the electric car game, they are the king. Not only the United States, like they have no competition in the United States, but even in the market overseas where there's competition, where there's 11 to 12 other electric car companies, they have majority of the share.
The most popular country
in the fucking world. In the fucking world. So it's the financials, they don't really add up right now because it's a growing company. It doesn't really make sense. And he's reinvesting every penny of profit back into the company to fund his mission.
Oh, that'll make you comfortable.
So as long as I understand that it's a gamble, but it's like one of those things that, okay, if you gamble with it, he might strike out. But if you gamble with it, it's gonna be a grand slam. Like, it's gonna be a grand fucking slam.
Right. Question, what do you think about Shopify then?
Okay, so
just curious.
Yeah, so Shopify as a business is very good.
Is it? Okay.
Shopify as a business is very good. And the fact of what it offers to entrepreneurs and the market is also very good. But as far as an investment, I don't really see it as an investment because there's no need for Shopify. There's just no need for it. All it does is allows a regular person like you and I who are entrepreneurs, and it gives us a simplistic way to sell products to consumers, and we can have an autonomous an autonomous way to do this. So I remember a while back, 2016, right? I was trying to figure out a way to, obviously I was investing in the market, and it had just started. I just started the fund that I have now, but I was looking for ways to build cash flow, monthly cash flow. Stocks don't really do that unless you have dividends. You have high amounts of money in dividends, right? So I've tried to figure out an internet business to bring in this monthly revenue, and I had one at the time, but I just let it go. I didn't do anything with it, right? Shopify didn't exist until a year later, 2017. So, long story short, we started going hard on real estate. So my mind completely went off of that. But as I backtrack, Shopify came into the scene hard in 2017, but it allowed a situation to occur that what I was looking for, which is being able to sell products and just be the middleman. Right? So with Shopify, for example, I can find a distributor in China or on eBay or on Amazon and set up a store where I sell their products, but the customer doesn't know, and I have no inventory, and they buy things through my store online. And I get the profit without touching anything. So it's not a service that is needed for the consumer, but
for a long-term investment, that's not something you would be take advantage of for a long-term.
No.
As far as their stock.
No, to be honest, no.
It did shoot up a lot. It did increase a lot, but that's probably just because of what's going on right now.
That's the only reason why. That's the only reason why it shot up. Wow, because as we were talking about before, and I hope all of this is recording because it's good content. I know I'm recording on this side. I know you're recording on that side. I'm just I just have anxiety about the recording now because of all the shit.
Yeah.
Fuck.
Yeah, I hear you, brother.
But but as we know, as market, like I looked at like 40 different sectors the other day. We were talking about it, and the online consumer sector is stupid. It's fucking stupid right now. So Shopify being an online sector with people's increased spending on online has gone up dramatically because they're forced to, and the stock market and the American market is a consumer-based market. 60% of the reason why America is so great economically is for the fact that it's a continuous consumer base. Buying and spending, earning, spending, earning, spending, earning, spending. 60% of the market is based upon that. And it hasn't, and the reason why the market hasn't slowed down because people are able to, whether it's government money that's given inflationary by the government printing money, or whether it's money by stimulus, or whether it's money by the fact that people still are able to work or even loot and steal from stores and sell it on eBay, like some people have been doing, where they robbed that museum and he's taking that artist's life work out of the fucking museum.
Putting on eBay.
The fact of the matter is, it's still the consumer-based market has still been able to continue, and Shopify allows that. Shopify allows that, but for longevity, the only reason why I say longevity it doesn't work because it's like TikTok, for example. It's like social media, for example. Like when it comes from social media, Facebook is not going anywhere, but Twitter could be replaced. TikTok can be replaced. Instagram could be replaced. Facebook will never be replaced. Will never be replaced. It is the king. So Amazon will never be replaced. Even places like Walmart that has online stores, and they have something unique where you can order online, have it shipped to your house, or order online and pick it up at Walmart to where somebody brings it to you. You say, I'm here, I'm at Walmart, I ordered this. Go there, sit down in the waiting area, and somebody gives it to you. Or you could just go in there and shop. So those particular places will still dominate. Shopify is only good for business people like us. It does nothing for the market itself, really.
That's what you're saying. That's good. I was just curious because I know that, some people mention that, anytime a company has a great year or the stock is in this one, people put it up there with the Tesla, the Amazon and all that. And Shopify came up where some people were saying that it was a solid investment, in general, saying that the stock, I don't know what percentage it went up, but I know it's probably a lot because I think it's at 1,132 right now.
Yeah, I mean it is what it is. So
the money almost 9 times itself.
Yeah.
But that doesn't mean it's going to 9 times itself again, though.
Exactly, and with this current year, it is what it is. Like any economy or any particular situation, the guys who played on the Bulls when Michael Jordan was playing, even if they were just bench players and only played an average of 2 minutes per game, they still got 6 rings. They still got so the fact of that the consumer market based online sector as a whole has done extremely well, and all the companies within it have done well, gives no validity that every single company within that sector is a great company all of a sudden now.
Yeah.
People don't understand that.
People can have confirmation bias.
Yes, people don't understand that. They just remember, a lot of people, it is what it is. like Warren Buffett and Charlie Munger said, the problem with the stock market, especially nowadays, is that it's extremely liquid. So it has casino-like characteristics. So and people don't necessarily, a lot of times, don't treat it as an investment. They'll treat it as a casino. So when they see, oh, this is going up, 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 up. Oh, Shopify is a great company, everyone. Shopify is so amazing. It's so great. Right. Because of the fact that they see the cha-chings going off.
Right.
You know, it's no different if somebody wins the pick 3 on the lotto a couple of times within a lifetime. They're going to say, well, that's the best game to play in the lotto. It's no different as a lot of people oftentimes they'll win money playing the penny machine at slots in Las Vegas, and they'll win sometimes, so they'll say that's the best game. But
right.
It's just
the odds are not there.
It doesn't actually mean that it's a good game. You're still just gambling, you know.
Yeah.
Because like some of those people like on, for example, Instagram, like I'm not going to shout their names out on here, but one of the guys you follow and one of the guys I follow, and I even see some of the people who I know personally that I can see that I'm following, that they're following me, are also kind of following these two guys, and you know who I'm talking about, the two guys, right? But while one of them is just completely casino based, this guy, I mean, he's just completely casino based, and the other guy is actually the investor. He's actually has a lot of knowledge, and he is a long-term investor, and he knows the fundamentals. But I would say like maybe even 50% of his behavior is still very casino based for whatever reason, and it is what it is. Again, the neuroplasticity, goal orientation. So the fact that us as people, we strive for the dopamine hits, and investing in the market in a way where it's like casino like, where, oh, I hope I win. Like, remember goal orientation? My goal is to get this amount of money immediately, and if you're able to do it, you're getting confirmation bias and you're starting to believe like this is a good idea. But in reality, you're gambling. You're absolutely positively gambling. It's not sound investing. 90+% of the time you will not beat the person who buys and hold. There are times that with that habit you will have amazing years, but you still won't beat that person who just drops it and walks away for 20 years and comes back. I mean, the tortoise always beats the hare.
There's actually, I gotta send it to you. There's actually a 2-minute video this one dude made to put that in context. He was like, he used 3 companies. That's it. That's why he said you don't need to invest into a lot of companies. Obviously, he showed if you invested into Apple in 2000 and you just did $1,000 a month for the 20 years till today, it would be $28 million. Your investment would be like $240,000 in cash, but it would have turned it into $28 million. Then he just showed Tesla in 10 years, that would be like 2.8. Then he showed one that no one thought of, which was, I was going to ask you about this, Monster. He said if you invested into Monster, the drink Monster, in the 20 years, it would be like $43 million, which I didn't even know Monster was even a very good company in general, just as far as just over long term.
Yeah.
Long term.
Yeah. I never thought about it as an investment because obviously Ted Williams and Warren Buffett with the punch card, you only try to pick 20 in a lifetime. So at some point I had to look at their financials because in 2013 I've looked at every fucking financial of every single company on the market. Obviously that's how obsessed addicted I was, but when it comes to the energy drink model, there's nobody who dominates more than Monster. Like, as you see, a lot of energy drinks come and go, like Rain and all these different things. They come and go. They come and go, but Monster is always there. And when it comes to energy drinks, when people just in regular conversation, just observing as a consumer, people drink the Monster. Do you want that in Red Bull? That in Red Bull.
Right.
That in Red Bull. But I'm not sure if Red Bull's a public company or not. But also, one thing that's unique about Monster is they have a very extremely good marketing campaign because they're involved in motocross. You see Monster logos and insignias on their drivers. They have they're in rally car driving. They're in Formula One. They're in NASCAR. They have a very they have a very good No.
In boxing or MMA?
No, I have not seen them in that market, in those markets.
Oh, okay. I was just curious.
It just seems like it goes. Actually, MMA, yes. Matter of fact.
Oh, okay.
At the press conferences, they do have Monster energy drinks right there on the stand. Yes. But yeah, that's a company that knows how to survive. I mean, they know how to survive.
I remember looking at it, and it was just three. Anyway, it was just it wasn't about investing in these companies, just context. Right. It was a context of a, like, for instance, just to give you my point is like, you got these people that want to invest into all these derivatives and all these basically these stock options and all this day trading and everything that's fancy, right? And I remember a quote from Bruce Lee that says that I don't fear the man that tries 10,000 different kicks. I fear the man that does one kick 10,000 times.
Yeah.
Meaning that I don't fear the person that wants to do 100 million different things. I feel the person that does one thing 10,000 times.
Yeah.
And I look at the long term, just the context of investing in one company, which is good based on what you said, that's financial, good value investing, and holding into their 20 years, it's going to always be like you're talking about. It has no one. Anybody can do this. If you have $500 to $1,000 invested a month for 20 years, you're going to be a lot better off than the guy that's trying to day trade, the guy that's speculating, doing all these things that are considered exotic, which makes you feel like you're more intelligent than me because you feel like you're doing all this analysis day to day, then I'm just doing something basic. And it comes down to it over the long haul because you're basically just buying and selling. You're selling. You're selling off your investment, where I'm still holding it. I could be at 20. Think about it. We could easily be at $28 million if our family all put 10 people just gave me $100 a month, which would be $1,000, and I just invested in a company for 20 years. We could easily be at $20 million.
Yeah.
Hypothetically.
Yeah.
Just for you paying me $100 a month.
Yeah.
Simple. It doesn't even have to be that much. Just or 20 family members just giving me $50 a month.
Yeah, and
then I invest that $1,000 per month for the next 20 years.
Yeah, and really, that's the problem of it. Just that. That's the problem.
Simple,
it's too simple. Yeah, it's too
simple.
Yeah, it's too simple.
It's so simple, but yeah, if you cannot get somebody, and that's where I found out, Rue, that the true intelligence is not just the fact that you just invest the money. Well, that too, but the concept of just being able to not sell it off in a long period of time. Because what happens is, I knew a firefighter, I'm not going to put his name out, but he invested in Apple in like 95. When it got to about 60,000, he sold it off and bought a house or whatever he did, consolidated some debt, whatever. And he doesn't want to tell me the number, but the number would have been if he would have held it. And that's the thing about us being in a low blue collar, always buying shit, always trying to, okay, I got to sell it off now because they say the Apple's going to drop or the stock's going to drop. So I need to sell off. But if you sell off, you also have to make sure you put the money back into another asset. But just to sell off the stock and then just to buy, basically things. Because he basically sold his stock to buy a house, which at the time a house and I'm going with the Kiyosaki, what's his name? Rich Dad, Poor Dad, forget his name.
Yeah. Richard.
I think it's Richard Kiyosaki or whatever his name starts with K.
Yeah.
Anyway, make a long story short, your primary house is not an investment. He took an asset, bought a house, and then the house never made him any money.
Right.
Because he ended up buying it and basically bought it at market price at that time.
Mm-hmm.
And you know how it is when you own a home. You want to fix up the deck. You want to remodel the home. You want to do this, that. And then he has a family, and then now it becomes a more, what I'm saying, to make it more of a home. You got a family. So you're not investing at this point. It's not investment.
Yeah. It's
literally just somewhere to have your children live in a house that you want to raise your kids.
Right. And he's not house hacking or any using.
No, he has no roommates. It's just essentially, but the fact that if he would have, I don't want to know the number out there, but he said it would have been basically about $500,000-$600,000. You're talking about if you want to just held it today.
You just want to help.
But that's the thing that I'm learning now. Long term, this is what these, and I don't want to put race on it, but these is what some of the prominent rich people in the economy is doing. They're not smarter as far as more intellectual smarter than us. They just have discipline and temperament to hold.
Yes.
For long periods of time.
Yes.
Period.
Yes.
And that's why I told you anything I'm investing is 20. I'm not even looking at it until 20 years. I don't even care if I have another opportunity. I don't want to pull out of it because of the concept of the context that I'm learning. I'm learning a lot of context of people that hold for long term. Long term, 30 years. Because that puts us what? Another 20 years from now, we're at 50. 50 years old, there's a lot of people that are broke at 50. I don't plan on being broke at 50.
No, me neither.
Based on how much I'm investing per month, in 20 years, I'm definitely going to be multi-millionaire, 100%.
Yeah.
You know this. This will be 100% will be multi-millionaire.
At the minimum.
In general.
Yeah, at the minimum.
Not even millionaire, multi. Like, we should have a few mims by 50.
Right.
All because of that. But again, back to the, like I said, that quote. Focus on one thing and become an expert. Like they say, 10,000 hours in one thing makes you an expert.
Yes.
Instead of trying to do 10,000 different things, focus on one thing. Like I said, I don't fear the man that's a jack of all trades. I fear the man that's a master of one thing 10,000 times. That makes sense because that's somebody that's trained that one move, that one strike point 10,000 times, which then again, that's somebody that's an expert. Because remember, one thing when they say we got an expert, you got to be an expert at hiring an expert. I don't want to hire somebody that does 10,000 things. I want to hire one guy that's good at, or girl that's good at this one thing, and then that's the person I want to hire. And and everything we deal with, I want to deal with those type of experts. If that makes sense.
Yeah.
You know?
Yeah.
It was something I read the other day about that, or probably a couple weeks ago about that. Just being knowing who to hire and knowing what type of people to be with, and just focusing on one thing and not we do focus on a lot of things, but you know what I'm saying in general.
Yeah.
When it comes to
you gotta hyper focus.
People got 20, 50 different companies. I know a guy that invests in like 60 different. I got like 60 stocks I'm into right now. I'm like, how does that even make sense?
60 stocks.
It doesn't even make sense. It's too much.
Yeah.
For one person, we're not talking about a hedge fund here. We're talking about a guy that's just individually stock trading into like 20, 30 different stocks.
Yeah, people a lot like even Les Brown said this before. A lot of people confuse what's the word like a lot of people confuse with like busyness or activity with being effective. Right. And just because the more busier you are doesn't mean you're being more effective. I don't understand the ideology around 60 stocks. At the point, I don't. There's no really. The more stocks that you're acquiring, the more diversified you're becoming, which is making the portfolio a lot safer. but it's not making the portfolio grow any faster. It's not doing that at all. If anything, you're actually slowing it down because the weight now of the portfolio is going to be determined by another vehicle. When you think about, for example, like if you have a carriage and you have horses in front, keep adding 2, 3, 6, 8, 10, 12 horses is not going to make you go faster. The more horses you add, your best bet is getting the fastest, most effective horses, and just having that small amount and having them drive you the whole way instead of just more horses, more horses, more horses. Yeah. That's not going to help you.
Yeah,
it's not.
I agree. And you know what? Too, I was thinking about stress. Like investing in the long term, I don't have to people tell me all the day, the people that do this day trading that I follow, they're stressed because every day is high pressure.
Oh, of course.
Why would you want to even be in the high pressure of where you're got to be in and out of a trade day to day to the point where you're psychological, it's either high or low, depression wise.
That's why
I don't care about a couple dips because I'm going to ride that dip in over long term, which 100% of recessions always bounce back. It's 100%. It's not even 99.9.
Right.
All recessions has recovered and recouped 100% of the time. Am I wrong?
No.
No, that's what I said. Based on that, it's 100% that they're going to recover. So from a long-term hold strategy is I'm not trying to be in and out of trades. Why would I want to stress, bro? Why would I want to stress like that?
100% of crashes, depressions, and recessions have recovered and have recovered higher than they ever have before.
Yeah, isn't that crazy? It makes people
100%.
Still want to 100%. That's not even 99.9, man. It's 100%. And you people are like, oh, we got to do these day trading, and that's why I got to get James. I mean, he's one of those. He wants to do this day trade. I was like, bro, why would you stress?
It's more fun.
You have to
the casino
exploration.
Yeah, the casino like effect of it is more fun.
I know it's more fun. It is boring to just say, oh, really? You just buy this and continually adding a monthly cash valuation to your portfolio and just do it for 20 years? That's all? Yeah, that's it.
I remember in New York City, right, in 2016, right, 2016, the year before I came here, there was this Dominican woman who owned a liquor store, right, in the neighborhood. I used to go there to get my bottle of Bacardi or whatever every now and then, a little small pint, and I would talk to her, and I always saw her in there working, and after a while it made me realize, well, she's the owner, because she would be in there, and then sometimes her daughter would be in there working, like when she wasn't there. So you're the only person in here, and then your daughter's in here working sometimes, and then that's it. I said, this has to be your liquor store, because she didn't want nobody to know. But long story short, I remember telling her about my business and the fact that it's a fund. I buy investments and I hold them, and basically that's my net worth and that's my earnings is through the investments. And she said, oh, and that's it? Oh, that's so boring. Why don't you get another business? Get another business. It's so boring. You see, my business is fun. I get to talk to people and sell liquors, and then I have, the models. They come and they show off the liquors and stuff, and they get commission. It's fun. Why don't you get another business? And then I said, I said to her, it's not. Well, I said, first of all, it's fun to me. It's not gonna be fun to everybody. But it's, second of all, really, it's not about fun. It's about having something that's successful.
Right.
I don't have to worry about nothing, because I know every year I'm gonna win. And on years that it appears like I'm not winning. The year after that, it's going to recover, and it's going to recover with a double win.
Right.
And then 6 months later, she went out of business, and I went by there. She started getting skinnier.
No, bro, you're talking about that, bro. You're not, all right, we'll cut the recorder on that. Are you talking about that Hell Rel verse? You talking about that Hell Rel verse? And he talks about that chick where she was balling and was dealing with a ball that always spoiled her. And then he stopped calling. And then she got skinnier. That's the first thing I thought about when you said that. I'm thinking about that Dipset fucking verse.
I mean, obviously that made me think about that too. But all jokes aside, she owned the liquor store, which was the real estate at the bottom of the building. So she tried to buy the air rights to the upper half of the building, which was commercial apartment building. And she fucked up, and she was telling me like she was trying to get the deal. She was working on it, and arrogantly telling me, yeah, these other guys are trying to get it, and I'm gonna outbid these motherfuckers. Watch. These motherfuckers think they're gonna outbid me. I'm gonna out fucking bid them. Then next thing I know, I come back, she's having problems. A month later, she's having problems, hard problems. She's stressed. She's looking tired. Then a couple weeks later, I kind of stopped going to her because I moved like 5-6 blocks away over where I was living near Don. I was living over there by Don, and then really I just stopped messing with Bacardi. Anyways, I just kind of stick to the Coors Miller Lite, whatever, because the lick was just it's just too hardcore. So, and then so 2-3 months go by, and I go in there, and the store is empty. The liquor store is empty. There's nothing on the shelves, and I'm looking at her, and she's skinny. She's skinny as shit, and she's looking depressed as shit. And when I went in there, and like a month or two before that, she's asking me to borrow money, and I said, "Listen, I don't give out loans. If you need a loan, like Warren Buffett said, if you need a loan, go to the bank." Yeah, he told his family that. Warren Buffett told his family that if you need a loan, go to the bank.
I respect it.
I don't give out loans. If you need a loan, go to the bank. Because if I give you money, I'm giving it to you just to give. But unless we're doing something like how me and you do, where it's business, then that's different. But you as an outsider, I need $1,000. You know what I'm saying? I'll give it back to you. No.
That's you learn your lessons with those. When somebody asks you for money in need, it's because they've already shown that they can't pay the money back in the first place. That's why they're in need.
Yeah.
So they always say when somebody needs money, go ahead and assume it's gone. If you give somebody that asks you money that needs it, 100% assume it's gone.
Yeah.
Whatever money you give them, just assume that you're not getting paid back. Yeah. Because if they were able to be financially astute with their money and had some financial literacy, they would have never been in the position to be asking you for money in the first place.
Right.
I always say that to anybody that asks me money. It depends on the situation. Now, if it's if you're a family member and it's an emergency situation, health-wise, that's different. But if it comes down to you got your health and you got 2 legs, 2 arms, and you just made some bad financial decisions, you're usually going to have to just learn your lesson. You got to learn your lesson. Especially, when there was an individual that I knew that asked me for money and they were buying a whole bunch of Prada and Gucci and Jordans and shit like that. And they asked me for money because their electric and water bill was getting the electric was getting turned off, water was getting turned off. And the first thing I said was like, hey, fam, you might want to sell your Jordans or something before you ever do. And I said, actually, it's actually disrespectful to ask me for money when you have more better gear and clothing than I do.
Yeah.
I had to actually say that because it threw them off. Like, damn, bro, I didn't come at me like that. It's actually, why are you coming at me like that when you got all the fresh gear and I'm over here living basic T-shirts and shorts?
Yeah.
And because I was willing to sacrifice. So I sacrifice, and because you can't, I have to give you money?
Yeah.
I have to pay you money because you wasn't willing to sacrifice and I was?
Yeah.
Fuck out of here, bro. That shit does get me hot. That's another subject, but that shit gets me hot, man, when people don't want to sacrifice, but then want to come to the people that do and ask them for a handout.
Yeah.
Like, brother, you were able to sacrifice just like me.
Exactly.
You chose not to. I chose to. And this is why my bank account's this, and this is why your bank account has cobwebs in it.
Exactly.
That's 100% your fault. You know what? Lesson learned. Go ahead and struggle. And why would a person hit up a person? You got family members, other way. This is a person I'm not even close to, and they hit me up. That just shows you. That's like her hitting you up for money. You don't know her like that. You're not family member or friends or tight. But she still asked you because she knew you have it.
Yeah. Yeah. Yeah, because of course, every time I go into the store, you know what I'm saying, I pull out the knot. What you need. You know, let me get that. You know, I pull out the knot. Yeah. So she knew I had butter. Well, she knew I had butter, so. And she used to always tell me, why are you always carrying so much money? You like to show off, don't you? You like to show off.
You're showing off by wearing makeup.
And I said, and it is what it is in New York. Carrying a wad of money, it's a little bit more. It's a little bit more common, for the simple fact that most places are cash places.
Right.
You know, it's funny when you live in a place like Virginia, North Carolina, or something like that. 7-Eleven's is the convenience store, and it's a franchise, and they take cards. But in New York, when you're at these bodegas and whatnot, or you're dealing with taxi cab drivers, cash is king. Everybody takes.
Right.
Or you have a street vendor. You want to buy a hot dog, or you want to buy Gatorades or something.
They're not taking cards.
No, they're not taking cards. So it's more fluid to have cash than card. So everybody, even taxi cab drivers, they're getting money. They need change. People are paying with cash. So you see people with wads of money all the time. It's like it's nothing for somebody to pull out a wad of money. You know, street vendors, they got knots because they need change. Oh, you buying? Oh, okay. You want a slice? Oh, okay. Oh, you want some hot dogs? Oh, Gatorades. They making change. Oh, yo, t-shirts. You know what I'm saying? People got cash.
Yeah,
People got cash all day.
Not paying for a merchant account.
Right. Yeah, they're not getting a merchant account.
Yeah.
They don't want to pay that 1% fee.
Yeah, and you gotta remember too, also with us, just me and you, we are emotionless to the cash, and this is why having the cash in general, when people seem like we're showing off, it means nothing to us.
Yeah.
It doesn't even give us any type of high or anything. So when even I know what you're saying, you pull it out, people look at you like, wow, oh my God, what are you doing all that cash? Or it's dangerous. What do you mean it's dangerous? Yeah. I've been holding this cash for 20 years. I've been holding cash like this for 10 years.
Yeah.
Not once did I ever got confronted with nobody. Not once did I ever felt like I was in danger. So this is just something in your imagination because of how it makes you feel.
Right.
Seeing somebody with a lot of cash. Right. It makes you feel like it's either A, dangerous, or A, he's showing off, or he doesn't care, that, there's other people around that might be unfortunate and not have any money, and you're just throwing it in their face just for pulling it out.
Right.
It's like, listen, I'm disconnected to the money. The money is just a representation of what society decides to value things at and pay for things and things of that nature. To me, it means nothing more than it's just an instrument, it's a vehicle. It is what it is. There's nothing more, nothing less. I don't get into the psychologicals of the money because it doesn't affect us.
Right, it doesn't affect us.
You know what I mean? Like, if I see money on the ground, I'm not picking it up. The girl said, what do you mean by that? I would pick it up. I said, because I know how to make money now. I'm fucking financially intelligent. I don't need to see $5 on the ground and feel like I need to pick that shit up and pocket it.
Right.
I said, I'm actually above that now. I would never pick that up.
Yeah.
Actually, I feel like it would be petty of me to pick it up based on what I know.
And if I'm carrying it, obviously I'm in a position that I can lose it. Because if I'm carrying it to spend. not to show off. It's not my whole net worth. Remember,
Yeah,
I got
exactly.
investments. That's where the money's at.
That's
This is
where the
just
money's at.
change. This is change that I have to
This is
spend.
change.
Yeah. So if I lose it or spend it, if I lose it or spend it, it doesn't matter which way that the money gets gone. If it gets gone, it doesn't matter. That's why
It
it's in
doesn't
the
really matter.
pocket.
That's why it's in the pocket. Because other than that, it would be in the investment. If it
Exactly.
was that.
Exactly.
No, I agree with you. No, I 100% agree with you, and that's why it's so hard. And I've been around my family members. Why do you got all that cash? My mom's like, "What are you doing all that cash?" And I'm like, "It's not even that much cash.
Yeah.
It means, $1,000 or $2,000 is not a lot of cash to keep in the pocket.
No, it's not.
For just day to day. I want to enjoy this or I want to enjoy that, or you know what I'm saying. Or again, and also people don't understand that I'm in real estate. There's times where if there's something that happens. And it's, let's say my water pipe breaks at 2 a.m. If I want to get a certain individual to get over there and fix it for me, he's going to want payment and he's going to want it now. And if the banks are closed and maybe it happened on Friday night, I can't go to the bank till Monday. So another reason why I keep cash on me, it allows me to be able to have access to funds that may be necessary in an emergency, especially if it's over the weekend. But you're not thinking like that. I'm always thinking ahead. So I'm thinking about worst case scenario.
Right.
That I could get somebody like, yo, bro, I already got 1,000 right now. I'll pay you right now on the spot, 2 a.m. You go knock this out for me.
Yeah. You got to have some liquid.
Yeah, I'm in business, bro. I'm in business. I have to have every form of money on me. I got to be able to pay people in need of things.
Yeah.
And again, it's just something that just makes my life easier. And then just the fact that I know that I can carry a couple thousand in my pocket any given day and not really mean nothing.
Yeah.
Also lets me know that I'm in a good situation.
No, absolutely.
Compared to others.
No, absolutely.
A lot of people can only hold that type of money when they get paid.
Yeah.
And then when they get paid, it's gone within a week or two. A lot of people think that when we have this money in our pocket, oh, you must have just got paid yesterday or Friday. Like, no, we don't. First of all, our checks don't even get cashed. Who cashes checks anymore? Most companies don't even cash checks. They're all direct deposited. So, what do you mean we did? First of all, I never even pull out my check. So just pull it out and just put it in my pocket.
Right, yeah.
That's horseshit.
But I think that is what the average individual does. I guess, or just in that environment, maybe like the type of person who goes to a club nowadays or goes to that type of setting, I guess that is something that they would do. So when they see, if we are in that type of setting just for fun, just hanging out, we go to Miami or we go somewhere, and obviously when we're overseas, they don't assume that. They actually know that you are an individual with money. They don't assume that you're just somehow showing off, because in those countries they don't have lots of money anyway. So they don't assume that you're just doing it just to show it off. It's an American thing. So obviously, it's just in those particular settings, it's looked upon as, oh, you're just doing it to show off, or that's all you have. It's like, no, it's not all I have, and I'm not showing off. This is me regular. You with, $20, $50, $75 in your pocket, that's you being regular. But me with 4 figures in my pocket is me being regular. That's all. Did you enjoy that clip? Well, make sure you subscribe to this channel. Catch most episodes on iTunes, Spotify, or any other podcast platform. Become an exclusive member and get full episodes and bonus episodes on patreon.com/AR Media Institute. Stick around for more videos on this channel. See you there, YouTubers.